Hi guys, welcome back to the channel. If you're new, please consider subscribing so that you do not miss future videos. Like this video, that's the only way that you can show me that you love what I'm doing and I should continue doing what I'm doing. If you're looking to download stuff, forex books, indicators, robots and stuff like that, there are links in the description box below. Visit those blogs and see if you cannot find what you're looking for. So I'm trying to make this a quick and short video. I'm trying to answer a question that was asked on one of the videos. What's the most crucial thing to learn in forex trading? There are many, so I'll start with what I think is a crucial one if you are hoping to make money in forex trading. What's a crucial thing that you need to learn to understand if you hope to make money in forex trading? I think what's crucial to learn if you're going to make money in forex trading is understanding multiple time frame analysis. Most people lose money because they are tempted to be trading at 5-minute charts. See, 5-minute chart, we are selling. At the 5-minute chart, we are selling. Let's go to a higher time frame. On the hourly, it does look like we are selling, but on the daily, look what's happening on the daily. So what end up happening is I've seen people doing this thing where they sell here and they hope that they are going to sell until forever. You find people putting a TP somewhere in this region and they sell here. But what the higher time frames are telling us is, you can see with this candle with a pin like that, that there is potential that the market is going this way, but people are coming and selling there. What you need to learn, what's crucial for me to understand when you are hoping to make money in trading, is understand multiple time frame analysis. What you want to do is to go with the higher time frame. For example, we go to a daily chart there. Say, okay, we have our daily level there, and we find another level. Let's say we have another daily level there. This is just an example. So we have a daily level there and we have another daily level there. Then from there we start going down to the lower time frames. What we are now going to need to do is to find a good entry. Although with the kind of trading that I do, I would have wanted to have my buy there. You can drop down to the 15. Now our purple lines are our daily levels. So what you want to do is, instead of selling at this point, what you want to do is wait for price to come at this level to buy, or at this level to sell. I don't usually recommend doing any trades in between here. That's my kind of trading. It's safe. You find that it's so safe. Multiple time frame analysis. So what I'll do here is, actually I don't trade these 15-minute time frames, but anyway, it's just an example. You find that because I'm a swing trader, most of the time I'm just sitting on my hands, because what I want price to do is I'm waiting for price to come to this level or this level before I can look for buy opportunities to go way up. Here I'm hoping that you can get a buy opportunity. I'm not looking for sales, I'm looking for buy opportunities here, so that we can continue going to the next level, because that's what I am seeing on a higher time frame. That's what I'm seeing on a higher time frame, the daily. So what I'm waiting for is for price either to come to this level or to break through. If I'm on lower time frame, to break through and actually continue buying, not to look for sales. So if you are going to be trading and hoping to make money with trading, is understand multiple time frame analysis. What you want to do is make sure that your 30-minute, 15-minute, 5-minute, 1 minute. I see people trading 1 minute charts. Risky. I don't do that. What I see is people trading 1 minute chart, 5-minute chart, 15, 30, hourly. What you want to do is make sure they are aligned with at least your H4 and your daily time frame. If you're going with the direction of the daily and the 4 hourly, most of the time, yes, you might have some drawdown. But if your risk management is okay, you can manage that drawdown and you find that you still continue what? Going into the same direction. Sometimes people take trades or based on 15-minute time frame. If you buy this candle on a 15-minute time frame, if you bought this floor, if you bought this floor on a 15-minute time frame, you were playing with fire, because look at where the market was going. You played with fire. That's why you got stopped out. Understand multiple time frame analysis. Ideally, go with what's happening at the higher time frame, the H4, the daily. If you love swing trading or position trading, then you can certainly look at what's happening at the weekly and the monthly. But a simple understanding of where the daily time frame is going will save you a lot of headaches. Like this video, subscribe if you're not yet subscribed. Until next time, guys, bye.